Hi, everybody. You're probably asking yourself, what is a bank doing at the DeFi conference? And this is a valid question. I mean, DeFi should be decentralized, permissionless, open, and banks are the opposite, right? We don't see it that way. We see it a bit differently, and today I would like to give you a banking perspective of how we see DeFi and how we see DeFi evolving, actually. My name is Vid Hribar. I originally come from Slovenia, so not far from here, but I work for Raiffeisen Bank International in Vienna, and there we have a competence center for blockchain applications called Blockchain Hub. What do we do there? We do a lot of research, so trying to stay on top of the developments when it comes to blockchain. Then we do a lot of strategy work, so we are trying to shape the strategy of Raiffeisen Bank International in terms where do we want to go with blockchain applications. And when we see an interesting use case or something that we want to test out, we also run pilot projects. And at the beginning, when we started back in 2017, we thought that blockchain is going to change everything, how we do things in financial industry. Now we realized that there are certain things that blockchain will definitely change, and currently we have three focus areas. The first one are cryptocurrencies. So will we offer cryptocurrencies to our customers? And if yes, how? Should we partner with an exchange? Should we build it in-house? And we're currently running a project with one of our network banks exploring these concepts. Then the second big area is the area of tokenized assets, or real-world assets, as you know it from the industry. Here we believe that more and more assets will get tokenized, and we want to build the infrastructure so that we also are able to tokenize these assets. And currently, again, we're running a project where we want to build the infrastructure, tokenize the first asset class, and then be able to reuse this infrastructure also for different asset classes in the future. Third big area is the area of digitized money, or money on blockchain. And here we see a lot of developments, not just on the central bank, in the central bank area. So central banks are exploring central bank digital currencies, but also the private sector is exploring concepts such as stablecoins and also tokenized deposits. And here we are running a project together with 3 other European banks where we're exploring whether it would make sense to jointly issue a banking euro stablecoin. This was the introduction, and now let's go to the actual topic, which is DeFi. We started observing DeFi already back in 2020 or 2021, where we saw that the volumes of DeFi were going up. So we saw that total value locked in DeFi protocols was going up, and this was also a trigger for us to start exploring this. As you can see on the graph on the left, on the right-hand side, you can see that after 2022, the volumes were also going down. This was mostly because of Terra Luna debacle, because of many hacks, rug pulls, scams. But now we're also seeing that the numbers are slowly going up. So this was the first indicator that kind of triggered us to look into DeFi more. And the second one is also the VC funding. So you can also see that a lot of VC money started to flow in DeFi in 2021 and 2022. Now the numbers are a bit lower, but this was again an indicator that something might be happening there. And then we started to ask ourselves, okay, the goal of DeFi is also to be the opposite of banks, to create a parallel financial systems without a bank. But we didn't exactly know how we should approach this. So we said, okay, let's see what are the elements of DeFi where we can also see a potential threat for us. And we define DeFi as a financial service or a product, something that is currently being offered by bank or traditional exchanges, that has trust-minimized operation and settlement. So it uses smart contract instead of trusted intermediaries to provide these financial services or products. And here you often hear the phrase, the code is law, right? We also saw that DeFi is using the non-custodial design and peer-to-peer transactions. So again, bypassing the traditional intermediaries, which are nowadays banks. And it has programmable, open, and composable architecture. So this is also a very different concept than what we have currently in banking. We have old siloed systems that are really, it's hard to make them to connect and to talk to each other. And then we asked ourselves, okay, is this a threat for us, or maybe also an opportunity for us to improve the current financial system? And we said, okay, let's see what are the benefits of DeFi and how can we leverage at least certain elements of DeFi and still keep our role in the financial system of the future. Coming first to the benefits, one of the biggest benefits of DeFi is definitely operational efficiency. So on the right-hand side, on the graph, you can see what are the marginal costs, so meaning the costs of producing another product or servicing another client with DeFi in comparison to the banks. So there you have the banks in the emerging markets where you see that these marginal costs are very high. In advanced markets, these costs are a bit lower, but still, if you look at DeFi, the marginal costs are very, very low. And we also took a look at MakerDAO income statement back in 2021, and we saw, okay, they are producing a lot of revenue, but on the other side, their costs are very little. And when we calculated what is the cost-income ratio, which is a kind of an indicator of profitability of banks, we saw that their cost-income ratio is 2%. Just to give you a benchmark, banks usually operate with cost-income ratio around 50–60%, which means if bank gets 100,000 euros of revenues, the costs of kind of generating these revenues will be around 50 or 60,000. So again, DeFi has way, way lower costs in comparison to the income that they produce. So operational efficiency is definitely one of the benefits that we see. The second benefits are also the new products that are starting to be offered by different players, so decentralized players, but also certain centralized players, such as yield farming or staking. And here we also saw that maybe our funds will potentially in the future start flowing into these protocols instead of being on our bank accounts. And then when we were thinking how to approach what role should we play in this ecosystem, we saw that there are different layers of DeFi. You probably know the 5 layers of DeFi. We are using this picture with 4 layers, and let me shortly walk you through. So at the beginning, you have the platform layer, which is the blockchain. It can be public blockchain, but it can also be private blockchain. And lately, we've been seeing a lot of developments, especially financial industry is starting to build also on private blockchains. Then you have the asset layer, where these assets are actually hosted. And we have the cryptocurrencies, which is a big existing market. We have the stable coins, which are also an existing market. And we have the tokenized assets, so different asset classes, which is still very little market, but we are also projecting that this market will grow significantly. Then we have the access layer, which represents the wallets. And currently in DeFi, of course, non-custodial wallets are used. But in the future, it might also happen that banks will start to offer these wallets, and these wallets will be custodial. And only then we come to the application layer, which are lending and borrowing protocols, exchange protocols, and so on. So, and where do we see our role, at least for now? We are exploring especially the access layer, so providing custodial wallets to the customers, because we are a trusted intermediary. We have the trust of our customers, and we believe that we can also play a role in DeFi ecosystem. And secondly, on the asset layer, we are already, let's say, issuing bonds. We are already issuing financial instruments. So here, it's kind of a natural move also to put these assets on blockchain and to tokenize them. So these are, let's say, the core areas where banks are currently building the infrastructure. And as already mentioned, we do believe that tokenized asset markets will grow. More and more assets will get tokenized in the future, not just financial instruments, but also other asset classes such as real estate, maybe even art and luxury items. And what currently banks are doing, they are tokenizing different assets and building the infrastructure, which means building the custody solution in-house. And where do we believe that things are still missing? So what are the missing pieces in this whole ecosystem for banks to start to get into DeFi? So first one, and I already mentioned it, building the infrastructure, building the custody solution and tokenizing more assets. This DeFi market is currently still very limited, let's say, to cryptocurrencies, but when it gets interesting for us is when more and more assets get tokenized, especially on the financial instruments. Second big thing that we need is regulation. Banks don't operate in gray zone, and banks like to have everything regulated. So MiCA now is definitely a good first step, regulating some assets, but also some crypto asset service providers, and some services that these providers provide to the users. Then there's also the DLT pilot regime that the EU started, and this is some kind of sandbox where market players can play with the market infrastructure. And there are also some local regulatory pieces. For example, in Germany, they have local legislation that they can already tokenize or even issue natively on blockchain bonds and other financial instruments. DeFi is here not directly regulated by MiCA, but we definitely see that DeFi might be affected also by these regulatory pieces. The third big thing that we need is cash-like on blockchain. So if you're tokenizing assets, we also need money on blockchain in order to swap these assets seamlessly. So now we have the market for stablecoins. We also have the regulation for stablecoins. But we are also exploring some other concepts, such as tokenized deposits. This is especially interesting for us because this is our current business model, and we would just kind of move it to blockchain to support blockchain-based use cases. And there are also a lot of initiatives on the central bank side, so issuing central bank digital currency. And here the ECB is, for example, on the wholesale CBDC side, running trials and experiments. They invited also the market participants, including banks, to participate in this. And they're exploring how to provide central bank money on blockchain. And fourth missing piece here is also that the industry has to mature a bit more. So there are still certain risks that are not being sufficiently addressed, at least in our opinion. And these are especially the technical or smart contract risks, compliance risks, sometimes lack of transparency, and also lack of decentralization. Nevertheless, there are already some banks and central banks that are exploring the concepts of DeFi. And let me give you a couple of examples. Project Guardian was a project where a couple of big banks joined forces under the supervision of Monetary Authority of Singapore. And they conducted a cross-currency transaction with tokenized fiat currencies and tokenized government bond. And here they were testing permissioned liquidity pools of tokenized bonds and deposits. Something similar was done also in the project Mariana. And this was a project under the supervision of Bank of International Settlement with other central banks, and they were exploring the cross-border trading and settlement of wholesale central bank digital currencies. But again, they tested the concept of automated market makers. One really interesting use case was also when Société Générale issued a bond, and their digital asset unit called Forge put this bond on blockchain, or these tokens, as a collateral to the MakerDAO protocol, and they borrowed DAI against it. And this was a very interesting thing because what they also tested is whether our current regulatory environment is prepared for that. And this was a live transaction, and this was also, from regulatory point of view, everything was clear and, done properly, let's say. With this, I would actually conclude my presentation. Couple of things that I want that you take away from this presentation is we're definitely observing DeFi. We don't see it kind of the opposite of banks, and we don't see it as a competition. Currently, we're still in the stage where we're building our own infrastructure to be able to connect to the DeFi protocols, but this is definitely something that will come, and I believe that these two worlds will slowly merge and also create a better financial ecosystem of the future. Thank you very much, and now I open for questions.
Thank you, Vid. We have one question from the audience. On the graph presented on the second slide, we saw a significant decline in 2023. The audience would like to know what caused it and how did it get back on the growth track this year?
Yeah. So the decline in 2022 or late 2022 was mostly because of the Terra Luna and the DPEC of USD. There were also many hacks, scams, rug pulls that happened in the DeFi space, so this also damaged the reputation of the DeFi protocols, and the whole macroeconomic situation was not great. So we still see that even though sometimes we claim that cryptocurrencies are completely detached from the general macro situation and that maybe Bitcoin is a hedge against inflation, we still see that these things are very much connected. So also the general macroeconomic situation impacts the activity on the cryptocurrency side.
Thank you. We have one more question. When do you see blockchain becoming part of banking process?
I mean, it depends what you mean part of banking process, because some of the big banks already have blockchain incorporated and are already doing certain use cases with blockchain. As an example, JP Morgan already have their JPM coin, and they're already doing the transactions there. Many banks are already tokenizing assets and tokenizing bonds. But here we also have to be honest and say that this is still in a very early stage, so there were a lot of POCs, a lot of pilots, also some live transactions, but the volumes are nothing comparable to the, let's say, to the potential, how much we see that there are assets out there. So it's slowly coming, and I think that in the next couple of years, this will get even stronger.
Thank you so much, Vid. Thank you for offering us a fascinating glimpse into how traditional finance players are beginning to embrace decentralized innovations. Please give it up for Vid.
Thank you very much.